Hi everyone, today I'm going to be talking about Deutsche Telekom, and I'm presenting it on behalf of myself as well as Margaret Dietrich for the Marquette University Applied Investment Management Program. The Deutsche Telekom US ADR ticker is DTEGY, and we will be pitching it at a target price of $24.91, which represents an upside of 29% above their current price. Thank you so much for tuning in to listen, and I hope you enjoy the rest of the presentation. On this slide, I would like to get a little bit more into the company overview. To start, the company is headquartered in Bonn, Germany. It was founded in 1995 and issued an initial public offering in 1996, a year later. It is a part of the telecommunication and technology services industry as well. The revenue streams are pretty interesting for the company, and as you can see, very diverse. So I'm going to try to explain this as best as I can. What the company does is first they break up their revenue streams into three geographic segments, being Germany, United States, and Europe. And this is the big three, which comprises of a very large majority of their revenue. So to start off, Germany, their home market. This consists of fixed network and their mobile business. So essentially, what that means is mobile business being the cell services and mobile internet services that they provide to customers. So your phone plan on your cell phone and in that business. And the fixed network is the in-home internet, the broadband internet service, where they are providing internet to people's homes as well as businesses, which I don't want to forget to mention, and essentially making revenue off of the fees and in both segments, the monthly payments that they make there. So that is the Germany segment. I'm going to skip to the European segment just because it's very similar. It's the same exact thing, just classified as fixed network and mobile operations. So their fixed network, like I said, the broadband, home internet, and their mobile operations being different kinds of operations, different kinds of businesses that they own in across Europe that are providing cell services, mobile internet to customers. So they're really broad across Europe. They have stake in many different companies, many different subsidiaries and whatnot, which comprise that 11.02% of total revenue, where, like I mentioned, Germany being 22.79. So the United States, the big one, 60% of total revenue. That is their United States business being T-Mobile. So T-Mobile, they are around a 65% owner of T-Mobile. And T-Mobile is now the third largest and kind of one of the three big mobile internet providers in the United States, aside from AT&T and Verizon. T-Mobile recently acquired Sprint Wireless, so Sprint Wireless is now part of that 60%. And this is where they offer the network, their 5G to United States customers, and something that are expanding pretty rapidly, as you can see, being such a big part of the business. So that's what the United States segment is. Quick rundown on system solutions is just offerings and digital solutions, such as the cloud and infrastructure like that. And then that's 3.2%. Group development is their entities and equity investments. So very small proportion, but that's just what they classify that as. And the last one is group headquarters and group servicing, which is essentially just segments not allocated already. So cross section of technology, innovation, and IT, just as that little under 2% segment there. Current revenue exposure: United States making up 52%. Germany making up 24.5%, and then elsewhere 23.5%. And that elsewhere is pretty broad. They work across Europe. They have business in Canada, and is making up a good percentage of their total revenue exposure. So that is a little bit about the company overview, and then we're going to move next to our recommendation. Thank you. A little bit here about the recommendation. Deutsche Telekom is currently a leading provider in a rapidly evolving telecommunications industry. They are well positioned to handle changing demands as well as industry shifts. And an example of this is the pandemic. The pandemic caused government regulation and laws to keep people at home, keep people isolated, keep people working from home and whatnot. And Deutsche Telekom has proven their ability to adapt to these changes, to provide better service to people being at home, joining work from home, all of these things that kind of is changing in the industry, Deutsche Telekom has been able to prove that they can handle these shifts and as well adjust to new customer trends. Customer trends are changing, and a great example of this is a lot of their customers are seeking to try to improve their broadband in-home internet and doing that through fiber optics instead of using copper wires in their homes to improve speeds. This is something that they are rapidly getting on top of and trying to provide for their customers. And just another example of how they are able to adapt to not only customer trends, but industry trends. They've experienced holistic growth. Revenue, EBIT, and net income grew 25%, 32%, and 8% respectively during the past year. And part of this was due to the increased demand for their services during the pandemic, which is important to note. Improving margins stemming from cost efficiencies is something that is really helping them from the top to the bottom, and then growing market share in many of their large markets. So this mainly the United States, Germany. This is partly happening through what I'm going to talk about here in the Sprint acquisition, but also at home in some of their more domestic markets, being able to do that as well. So innovation and expansion, 5G and 6G expansion occurring worldwide. 5G expansion is something that they're already kind of on the downward slope of that. They have spent a ton of capital expenditures to roll out their 5G plan and to provide customers with the best and brightest in the industry. And this has been seen. A lot of people have been regarding their various businesses 5G network as some of the best that you can get out there, which sets them up well for this up and coming 6G expansion to happen in the next 5 to 10 years. So very promising for the business. And then, like I mentioned just earlier, the T-Mobile Sprint acquisition in the United States. This is something that is very promising as increasing T-Mobile's market share, increasing their ability to build out their 5G network to improve speeds, add infrastructure to the network, so just servicing their American customers better. With all this, it's recommended that Deutsche Telekom be added to the AIM International Fund at a price target of $24.91, representing a potential upside of 29%. So here we're going to get a little bit into the investment thesis and start with our first driver, which is labeled as potential for major U.S. expansion. T-Mobile, which is Deutsche Telekom's American business, they own around 65% of it, merged with Sprint Wireless in 2020 at the beginning of the global pandemic. Now, market share from this merger rose from 17 to 25% for Deutsche Telekom, American business of T-Mobile. And this is interesting in a few ways. One, obviously adding that added market share from Sprint, but two, the whole American landscape changed a little bit, where before the merger, we had Verizon, AT&T, T-Mobile, Sprint, and then a couple other small players. And now it's turned into an oligarchy of three big players, simply just Verizon, AT&T, and T-Mobile, with Sprint a part of that. So the landscape has changed, and this merger essentially has given T-Mobile what we believe as the first chance in company history to truly compete at the level of Verizon, AT&T, and rival for that added market share due to the scale that they now have. In 2021, for the first time in 12 years, T-Mobile was named the fastest mobile network by PC Magazine. T-Mobile received a score of 96, while AT&T and Verizon received scores of 89 and 86. Now, this is very interesting because in 2020, T-Mobile was in the 88 percentile, while Verizon and AT&T were in the 96 and up percentile. So the script was completely flipped. And in the heart of a pandemic, a time when speed was valued, speed and network durability was valued above all else. And this is just proves the argument and proves that T-Mobile isn't here to stay. T-Mobile is here to compete and rival these people, these two big AT&T and Verizon businesses in the American market. So T-Mobile has done this, but specifically this brings a lot of value because when we think about what the industry is looking like now, speed is important amongst all else. Being home with the pandemic, people were on their phones. A lot of people need to require it for their internet connectivity working from home. And this, we believe, is going to provide dividends in the future for the company, being able to give that speed that people require. So the merger is starting to reveal their ability to gain market share, like I mentioned, and expand their already strong network. T-Mobile already is considered to have, by many people, the fastest and the strongest 5G network. So the strongest 5G network, meaning the infrastructure is there, but also it expands across the United States. They are covering a lot of land, and more than Verizon and AT&T as well, which is very interesting. Over the next 6 years, the U.S. network capacity will increase 14 times, become 15 times faster, and provide 5G to 99% of their subscribers, thereby paving the way for them to increase market share than ever before, like I mentioned. So increasing speeds, expanding the network, offering 5G, they're doing it all, and they're doing it at a faster rate than before and giving customers what they desire, and that is speed, infrastructure, and durability. The driver we're going to talk about is societal shifts that are pushing global industry growth. So the global pandemic revealed the extent that our society and we rely on telecom devices, with the importance of this speed and durability. So like I talked about in the last driver a little bit, right now, above all else, we have, before we kind of, got this sense, but now with the pandemic more than ever, we realized how much we rely on technology, how much we rely on the timeliness of information getting to us. And we saw this being a catalyst for growth during 2020 for most telecom businesses, specifically Deutsche Telekom. And it is leading to an increased need for enhanced internet access at people's homes as people are working from home and trying to connect with people in that way, and connectivity across devices within the home setting. So through 2025, it's expected that mobile phone users worldwide will increase 8% from 7 to 7.5 billion devices. Now, this is unique because a lot of people think this industry is something that, everyone has a mobile phone, like that's not growing too much, where that's false, because especially when you think about who is coming into the industry, the younger generations coming in, the older is kind of shifting out. That is the people who are very tech savvy, who are very kind of almost addicted to their phones. So smartphones is growing, and the amount of smartphones worldwide is growing, giving them opportunity there. But the telecom industry as a whole projected to grow at a 5-year CAGR of 5.4 through 2028. So we see this smartphone specifically, but just the telecom industry growing. This shows that not only is switching to smartphones still an everyday occurrence, but as the industry advances, there will be significant growth on a larger scale. Finally, another statistic here, an increase from 3.5 to 5 billion total in-home broadband internet users by 2023. So what that means is that more people are going to have internet at their house, access to internet, access to real-time data, and that provides opportunity for Deutsche Telekom to capitalize on that, to expand their network into more homes, grow revenues that way. So I think we can kind of come to this consensus that the industry is growing, but it's interesting to see how much it's growing and the opportunity when we're in an age when technology and connectivity matters above all else. So this kind of shows that even if something happens where they were not able to increase market share, staying at the market share that they're at, growth is still possible. So adding those two together is even more beneficial for the firm. So finally, we're going to talk about our third driver, which is pioneering into a fiber optic future. With increased demand for faster home internet speeds and with more people working and streaming from home, fiber optic rollout has become a major topic within the industry. So a little bit of background on this. There is these cables that run through your house and give you that home internet. Traditionally, these cables are made from copper wire, and they're kind of protected under the house, and that's what give you your internet speed. But recently, innovation has led to this idea that fiber cables actually are longer and oftentimes more durable, and most importantly, can transmit that signal a lot faster than copper can. So all in all, to the average homeowner, that tells them that they can get internet faster and it can be stronger. So It's especially important in Germany as they are seeking to catch up with other European countries who are farther along in the process. Currently, only 5% of Germany is connected to fiber optics, so there's massive room for opportunity there. And fiber, the amazing thing about fiber optics and what this will do for the company is it does not require the protection and recabling that copper does. So what that means is it doesn't require, copper cables require a layer of protection around the cable where that is not something that is seen with fiber cables. So they save money on the installation part of that with that process, and then recabling is not something that is evident with fiber cables as much as it is with copper. So it's saving money on maintenance costs as well. And these cost improvements, we believe, will contribute to a projected 5-year gross margin CAGR of 4.4%. So Deutsche Telekom has committed around $7 billion to expanding their fiber optic offerings in Germany. They're looking into pioneering and partnering with a venture capital firm to raise and to strategically roll out this plan. So becoming pioneers in that is something that is obtainable in the near future and will give the opportunity to, like I said, increase margins, improve cost structure, and all in all will give their customers satisfaction knowing that they are getting the fastest speeds, because as customers are starting to hear about fiber optics, they want that in their homes and they want to be with a provider who's going to give that to them. So as Deutsche Telekom builds this part of their business, they're going to be able to better service their customers and essentially improve customer satisfaction and hopefully grow market share as well. So here I'm going to get a little bit into the valuation and how we came to the price target that we did. There was 3 main metrics used, and that was first the discounted cash flow model. So the discounted cash flow model was weighted 70% in our overall valuation. And with this model, we used a weighted average cost of capital of 6.92%, which had 2 risk premiums, a currency risk premium and then a country risk premium. Long-term growth rate of 1.25% for the firm, which led us to an intrinsic value using the DCF of $26.87. Second, a price to earnings multiple valuation was used, weighted 15%, multiple of 14.33 was concluded on based on Deutsche Telekom's selected peers, which led to an intrinsic value of $20.62. Finally, an EV to EBITDA multiple valuation was used, weighted 15% as well, and a multiple of 6.71 was used based on the peers, which led to an intrinsic value of $24.91. All in all, with these weights, there was a price target concluded of $24.91. The current price is $19.41, representing an upside of 29%. So here I'm going to go over a little bit of the risk for the firm. The first one being coronavirus. The COVID-19 pandemic caused the company's revenues to increase by 25.4% in 21 compared to a 6.5% revenue increase in 2019. So a possible risk with that is that the company could not sustain the level of revenue growth for the future that they saw in the pandemic, and this would come from people getting back out into society, getting back out there and not relying as much on home internet services or not relying as much on using their mobile phones for streaming and whatnot that led to some of these increased revenues for the firm. So this is a risk that we see, but we believe that there's going to be a longer and more lasting impact of the pandemic than some people think, who may think that it's just going to end and go back completely normal, which is not the case. So fierce competition. The company's German segment of business invested heavily in fiber optic technology. The company faces competition from its peers in regard to which company can innovate and provide these technologies to customers quickly. So this is not something that is just fiber optics, but across the board, competition is high. As I said, customers value speed, efficiency, and that is brought by innovation. It's brought by technology. So there's a war on technology, war on innovation, and their ability to win that and to pioneer in that sense to give customers what they desire is a risk. It's an opportunity, but it is also a risk for the firm. Finally, maintaining customers following the merger of T-Mobile and Sprint. The company will be shutting down Sprint's 3G and LTE networks. A portion of Sprint's customers must switch devices to become compatible with T-Mobile networks. In the next couple of years, all Sprint customers are going to have to do this. 1/3 have already switched, and 2/3 are still waiting to make that move, as they have a couple of years left to do that. The risk is that the company may not retain the full amount of Sprint customers following the completion of this merger. So T-Mobile needs to continue to build out their network. They need to continue to provide great customer deals and great customer service and entice these customers to join and make that shift over to T-Mobile. It's a costly shift. It doesn't cost anything for them, but if they are enticed by another network, that is always a risk that they could switch over. Finally, we're going to talk a little bit about management. Timotheus Hotchkiss is the CEO of Deutsche Telekom. He's a German businessman with a degree in business from the Universität des Kunst, and he has been at the company for 21 years and was appointed CEO in 2014. So he's had a pretty long tenure as CEO. He has been in top management at 6 different companies before joining Deutsche Telekom. Christian P. Lilac, PhD, is the CFO of the firm. He has been with the company for 6 years, previously held the position of chairman at Bayern SA, chairman supervisory board at Deutsche Telekom Services for Europe AG, and chief executive officer and managing director at Microsoft Deutschland GmbH. So Christian has a very broad and diverse background, has worked for different types of companies, and has really proved over time his ability to innovate and to work in a changing business environment. So all in all, I just want to say thank you so much for tuning into my presentation. I hope that you guys enjoyed learning about Deutsche Telekom, and if there's any questions, feel free to reach out. Very excited for tomorrow and to get going and answer more of your questions. Thank you so much.